unbelievable. All right. So we're going to recap really quick. Basically, this should be like second nature at this point to everybody. But what we're looking at is on 30 minutes. We're using volume profile, session volume profile, value area high, value area low, POC, under inputs, value area volume 68, row size 100. With that, we're going to be doing, what's this line? Oh, that's what I just drew. We find our previous day levels basically at the end of every trading session. Value area high, value area low, POC. And then once we've done that, we would go to 65 minutes. And we're going to use the PVP indicator with period 1 week. And then same value area volume 68, row size 100, under style, value area high, value area low, POC.
Hey, Drew.
Yeah.
No one can see the screen.
Oh, cool. Well, fortunately, this is recap, right? So now everybody should be able to see, right? You guys can see? Yes? Okay, thank you. If it's really important for you to see that part, you can just go back and rewatch on YouTube. But I want to knock this out quick because I want to try to keep it to an hour tonight. I have a meeting, or I have an appointment really early in the morning tomorrow, so I got to get up early. From here, we switch to 1 month. Same value, volume 68, row size 100, under style, check those 3. And we're going to switch our time frame to 4 hours, and that's where we find our monthly levels. And I will say, like, at this point, you can start considering, like, charting your April low, high, and POC. They're going to shift, every day. Or they might not shift every day, but if we get, like, a big move outside of value, they might shift a tiny bit. But not bad to have them on there. I kind of generally wait till around the 25th of the month or the 28th of the month. I'll start putting them on. But just know that. And then from here, the last thing we're going to be looking at is period 12 months. And we switch to daily candles. And that would give us our yearly levels, right? I talked about this earlier on my YouTube, but I think right now we're targeting the 2024 value area high. I don't know why I can't see it right now. Oh, I don't have it on this chart. That's why. Let me do that really quick. Am I losing my mind right now? There we go. Okay, I have the POC. I just don't have the value area high. This is probably what they're targeting. Okay. Lastly, I'm going to cover this really quickly as well. Under session volume profile, anytime that we have 2 days that overlap, so like if I hit replay and act like this day didn't happen, we can draw our SIGs. And basically how we do that is we use the fixed range volume profile, and we go from the first candle of the first day to the last candle of the last day. And again, this just has to be 2 or more. And so as long as you have like 2 overlapping, you could use those. You can use these. You could use these here and this one. So like if you notice, where is it? So like this is overlapping with this, with this. You could use all 5 of those, right? Here, we're barely not overlapping, so you couldn't use this, right? And we're just going to look really quick and see if this had any effect the next day. Let's draw our SIGs really quickly. Row size 100, volume 68, and that would give us our first SIGs. If I'm going too quick for anybody, let me know. From there, we go to volume 95. While I'm doing this, also, Romy, I don't know how you're feeling or where you're at, but we really need to get you trading like ASAP so we have stuff to review. Or, if somebody else is willing to share trades that they've taken, when we do these, that would be great as well. But it's not, like it's not to embarrass anybody or whatever. And it shouldn't be embarrassing. We're going to take losing trades. We're going to have winning trades. And, like the losing trades we can learn from. Winning trades we can also learn from. But, okay. Really just more of a, like using it, for growth, basically. So I actually remember this. Retest, down, retest, down, retest, down. Normally, you would like kind of expect a bounce around the third SIG or the second SIG. We didn't get one this day. What we did get, and I called this out live, was when we broke below the third SIG and retested it, it acted as resistance, right? And so this was a short, and if you took it, so me personally, I'll just, before I even draw that, I would probably close right here. And I'm not looking at this, I'm looking at this candle. And of course, they line up. This is resistance turns support, right? We ended up going a little bit lower and then we bounced. But so that's where I would look to close. And if I was targeting that, it happened pretty quick and it's 30 points and some change. Okay. So really good trade if you took that. That's basically the only thing that I see off the SIGs. But generally they work more where you see like a bounce from the third, or if we're at the top, you'll see like a rejection here. And then kind of notice that right now price is trading through here, even though these levels wouldn't be on our chart anymore. They're still being respected. Okay. Take these off really quick. And then we want to talk about TPO. And I know I was talking to Romy briefly today, and he was telling me he was feeling confused about TPO. I could understand that. We're really like covering kind of like the basics of TPO. And if we look like, if I ask you guys what this is, hopefully everybody's answer is the same. That would be awesome, Numby. Thank you. Okay, so single prints, if we're looking at TPO, what if we're not looking at TPO? What would we call this? Is this a strong high or a weak high? That's what the wording I'm specifically looking for, right? Okay, strong high, perfect. And then this would be whatever, poor low, weak low, whatever you want to call it, right? And so the distinction when we're looking at TPO is just called something different, but it's essentially the same thing. The difference is on TPO, we're just looking at regular trading hours, so we're not interested on what happens in between that. And so if we're looking at today's profile here, this is, or wait, it's today's here, I'm sorry, Tuesday. Here we're going to have single prints, which would be our strong low, right? It's just called something different, not to confuse you, but the person that wrote the book on TPO named it something different. And then if we look at the top here, we're going to have a poor high, or what we would call like a weak high, right? And again, not to be confusing, did I put low? Okay, perfect. It's the same thing. Just the distinction is who wrote the book on it, right? So if I turn on TPO, what we're looking at is, again, on 30 minutes, regular trading hours, we have, it just happens that it's the A period this time that made a new low of the day, right? And the low of the day, there's no other blocks that came down here. So like, for instance, if these blocks happen to come down, whoa, that was funky. Okay, let's not use that drawing tool. Let's go this way. So if these both came down and touched the same area, this would be a poor low, right? Because now we would have multiple candles that come down to the same level. Or this is what, if we're not looking at TPO, this is what we would call a weak low, right? Same thing, just a different word. And knowing like the different word is like it's not really important. I'm not really worried about that. But just one we're looking at like as we're trading. So like if I turn off my TPO and I turn on electronic trading hours, right now we're open, right? And I'm not looking at the end of the day. I'm looking live as we're trading. And right now, like here, we have a strong high, or we would have what would be considered single prints if we were looking at TPO. And down here, we have a weak low, or a poor low, right? And so this is live. Whereas when we're looking at TPO, it's like at the end of the day, on a 30-minute chart, and we're figuring out on regular trading hours, like the low of the day was it single prints, meaning only one candle was down in this area. And when you draw your single prints, you would grab the whole area. So the single prints would go from like this BIJ period, all the way down to the bottom of the A period, right? So this entire zone would be considered our single prints. And when we have a zone like this, I like to draw, actually, let me show you guys this really quick. Under your rectangle, if you go to style and you check middle line, then you can see, like if you draw a rectangle, you can see where the middle is between the high and the low here. And I like to mark this because when we're trading, a lot of times they'll go to the single print mid and we'll get a bounce there, or we'll get a rejection there, right? So now at this point, I would delete this box, and we know this entire area is single prints. Kind of interesting that our single print mid basically lines up with our 2024 POC. But you know, if price was to come down to here, the most likely place for us to get a bounce would be here, right? And then this could also happen at the top. Like if we had single prints up here, we would be expecting price to come up, probably hit the single print mid, and then reject down. Okay. Everybody on board? Let me open up chat really quick because it looks like we've got a question. Okay, people are answering me. Yeah, also considered a failed auction, Numby. You're correct. So like I said, I mean, a lot of names for the same things. It just depends on who you're referencing, like who wrote the book, on specifically what it is that you're talking about. They all mean the same thing, and all of them are going to be traded the same. Might just be different verbiage, right? Which I don't want you guys to get hung up on different verbiage and have that feel confusing to you. But eventually we want to get to the point where we're using the correct verbiage. You know, like when we're talking about TPO, we're saying single prints and not a strong low or a strong high. And when we're talking about, you know, like live during the day trading on extended trading hours, as the profile is developing, then we're looking at, you know, poor highs, poor lows, or weak highs, weak lows, strong highs, strong lows. Because if you use those words and you're talking to me, and what I eventually want this to become is if you're using those words and you're talking to everybody that's now in this mentorship, you know, like if you tell me, so this is always confusing for me. Like people will say, oh, price was going up and then it bounced. And I'm like, wait, a bounce? Like you don't bounce off the ceiling, you bounce off the floor, right? You reject off the ceiling down, but not the other way around, right? And so for me, the correct verbiage is important because with like minimal words, I know what you're talking about, right? If you tell me single prints, I know we're talking about TPO. If you tell me strong low, then I know we're talking about like, you know, regular trading session as it's developing kind of thing. So if everybody's using the same words, like it gets easier to understand what we're all saying, if that makes sense. So wait, is this room limited to 50 people? I don't want it limited to 50 people. It's not limited to 50 people. Okay. Sorry. That was just weird. The only other thing that we look for on TPO. So single prints. Oh, I got to mark this one as well. Either at the top or the bottom. Poor highs, poor lows. And then if we're... sorry, I got to find one that did it. Wild. Okay, here's one. And this one's actually a good example. If our M period made a new high of the day or a new low of the day, right? Which in this case, it made a new high of the day. This becomes a spike. And the way that we look at spikes is, and just so you guys know, I always draw my lines from the A period forward. That's just me and my OCD. You don't have to do it that way, but it's just how I like to do it. So right now, this would be my my spike, right, at the top of this M period. And again, this can occur at the bottom or at the top. And I'll just show both examples. That way it's not confusing for people. And then our spike base is where the L period went up to. So this here would be my spike base. And then the way that this works is we're talking specifically about the New York session. If we open above the spike, it would be considered very bullish. If we open between the spike and the spike base, it would be considered slightly bullish. If we open below the spike base, that would be considered bearish. The only way that we can check this is like to hit replay, or actually, I don't need to do that. I don't know why I did that. But if we look at that spike, right? This is the open of the New York session, or actually the open was here, and we opened below the spike base, right? We gapped down actually pretty far. We started up and then sold off, had a little bounce, closed here. And then from there, I think everybody would agree this is very bearish, right? Closing or spike or gapping down from the spike base, opening below, we sold off. Just if we're talking about even from the open to the low, 225 points. If we include, like this gap, then it's 326 points, right? So that's how our spikes work if they're on the top. Let's look for one on the bottom. That way you guys have an example of both. I think this is going to be our M period here on the bottom, right? Yeah. And so again, I like to draw them from the A period. That's just my crazy analytical ass, or OCD, whatever you want to call it. Why didn't that work? So this would be my spike. And my spike base is pretty far away. The L period candle, right? And so same thing for the New York session. Actually, I'm going to turn off TPO so we can see these candles easier. So for the New York session here, we opened between the spike and the spike base, but then immediately went outside the spike base, right? If we open below the spike, this would be considered bearish. If we open between, slightly bearish. If we open above, it would be considered bullish. In this case, we opened between, but ended up going above the spike base. And then from there, I think it was all bullish. Yeah. So, so two examples where both worked. Again, I'm not attached to showing you guys examples where they work because it doesn't work 100% of the time, right? But it's just like a general guideline. And the distinction is like the market, at least for like SPY, closes on the M period, right? Futures is open a little bit longer, but when they create a spike, like we're not sure who was in control when this happened at the end of the day. Like, yeah, they came down to here and started bouncing, but who was really in control when this happened? Was it the bulls or the bears? And we're not really going to be sure until they open the next day and show their hand. Like, were the bulls in control and we're going to run it back up, or were the bears in control and we're going to end up going, below our spike and going down lower? Make sense? Anybody have any questions? All right, I don't see any questions, so I'm going to carry on. We're like half an hour in, and this is the point where, generally like our first 30 minutes will be like just recapping. First 15 minutes to 30 minutes will be just like a recap, or even repetition of what you guys already know. And then after that, we want to kind of look at like live trades, examples, whatever. I will say, like, I was sharing this YouTube. So when I was live, I don't remember what day. I think I was live Monday. And somebody was asking me, like, was 18,118 a big level on NQ? And I just want to show you guys kind of my thought process on this. I immediately like zoomed out and looked left, and basically I drew a line at 1818 or 18,118. And I just noticed, like, we just kept slicing through it. Like, it wasn't really being respected very much. Like, here, they bounced off of 118, right? But in general, like we're just kind of slicing through. Whereas like here at 1872-ish, we bounced off of it, right? Here 18 or 118 was rejection. But as we get closer and closer over here, like you'll start to see that this 1872 level was being respected way more than 118 was. And also, I identified a level 18164. I must have drawn the line further to the right because I'm not seeing it, but like here, I think like we're close and this is support, right? But I think as we get closer, so like here was the one time where I saw like 118 really being respected. But in general, the better level is this 1872. And then also here, like you can see that, or no, sorry. Here I drew the 164 level. So here it acted as resistance. Here, 72 was resistance. Oh, actually, no, this is the trade that I was interested in taking. So basically there was just like resistance here and support here. And from that, I drew that line and thought that this level was going to be more respected, or 18164 would be more respected. And then basically right after I drew this, we opened the next day and we got a nice rejection from right there, a nice sell-off. Just showing you guys, like, it's not doing anything really crazy, right? And then from there, after we ended up bouncing, we rejected off of that 18164 level. And I said, if they give us this again, this is an immediate short, right? And that you would target 72. And this is, you know, like this is cash money. And hopefully you guys can see, like, I'm not doing anything super crazy. 92 points. Like this is gold. And from here, I mean, you could have took it long. There's a chance you got stopped out. I don't feel like drawing entries and exits and all of that. I just kind of wanted to show this really quickly. Just at a brief like glance on a higher time frame, you can identify key levels. I looked at this within like just probably like 5 to 10 minutes and identified these levels, and then they're being respected the very next day. So with that said, we'll go to ES really quickly, and we're just gonna basically go over a trade I took today. And you guys know, like, I'm never, or you might not know, but I'm never ashamed to show where I've made mistakes, especially not if it's going to help people learn. And also, like, I learned from it today, in the sense that I need to slow down, right? So what happened today, I was on 5 minutes, and I was actually, so again, my entry was like right here at 16:20, which is 4:20 my time. I left my house, or I don't know the exact timing, but I had just finished my YouTube live on, you know, like my update on SPY. And time had gotten away from me a little bit. And then, I mean, Romy would know this. I wanted to take Henrik to the adult striking class that starts at 5. And of course, that time is like rush hour traffic. And so I like to give myself like 30 minutes to get to the gym, even though with no traffic, it's like a 10-minute drive at the most. But so at 4:20, when I took this trade, I had just finished my live, realized I need to brush my teeth, get dressed, get ready. Like I wasn't ready at all. so that I could run out the door. And I was like, oh, look, like price is coming down to our open, right? And that we're probably going to get a bounce from there. And I was targeting here, our previous week POC, right? And then I planned out my trade. My stop loss was 89, I want to say. So it was like over a 5-to-1 risk to reward. My stop loss was at, sorry, 98. It's not going to let me get it exact, but something like this. So I was getting over 5.5-to-1 risk to reward. Or actually, I'm sorry. My plan was to take profit at 460, just in case we rejected, just before the previous week POC. I'm still getting 5-to-1 risk to reward. Perfectly happy with this. I was taking 2 MES, and this would give me like a $500 profit for $100 risk, right? I was contemplating, I would have to show you guys other charts to explain this thought process, but actually, let me hit this really quick. I was contemplating putting my stop loss at 391. But then as I thought about it, I'm like, I'm really risking more than I want to be risking. I'm still getting 3-to-1, which is a good trade, but I'm really risking more than I would want to be risking. And if I was putting my stop loss here, I would actually really want it to be a little bit lower, right? Because this wick came right down to there. And so if they were coming down this low, they're probably going to tap this, right? So for me to do that, I would really have to move my stop loss more like this to avoid being stopped out like at that first wick that I highlighted or at this wick here, and hope that they don't go low enough to stop me out and then run. And I'm really not trying to risk however many points, like 21 points to the downside, even though it's still 2.5-to-1. Just more money wise than I want to risk on this trade. So I decided not to move my stop loss and just leave it like this. And I'm glad I didn't, because I would have got stopped out no matter, unless I put my stop loss like down here somewhere, I would have got stopped out on the trade. And so where I made my mistake, so when I was taking this, or when I was planning this, and again, I'm rushing because I've got to go get ready and blah, 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 whatever. And it's just probably a reminder to myself that I don't need to try to take every single trade that I see, right? And that if I have other stuff going on, like I'm trying to rush to get out the door and I still have to get ready, it's probably not a time to be worried about trades. Like even if I see a setup that I think is stellar, it's not the time. And the reason that I'm saying all of that is I thought this was an open drive, and it's not. The open was down here, right? So we opened here, got bought up, and then wicked back down, whatever, sold off, came back to the open. This was our open drive right here. If I was actually trading the open drive, that was my entry. And, like I don't know that I have an exit here. I probably, actually, looking left, I know I do. Yeah, so right here, I might not. Okay, so this is a strong high, so I'd want to get out before that, right? We talk about this all the time. So based on that information, if I was wanting to take that open drive, I would probably be looking to close right around here, the body of the candle. And now if I move forward again, if I took that same kind of trade, again, look left, figure out my stop loss. Like, so if my take profit is here, and again, like we would have been getting in there, right? For my stop loss, I would look left. Um, my eyes kind of immediately go here and also go right about there. And hopefully that makes sense to you guys. You could go a little bit lower, like to the wicks right here. And in doing that, like I would figure out where I'm comfortable with my stop loss being. So if I go off of this first line, I have no idea what my risk to reward is. 3.5 to 1. I'm good with this. I would bring this a little bit lower. So if they were, coming down to here to stop me out, I'm below that. I'm getting 3 to 1 risk to reward, and I'm risking 11 points to make 35. I would take this trade all day, every day, if I wasn't rushing, and that's the problem. Is I confused. Let me just delete this. In my hurry, this is the opening candle when actually this is the opening candle, or this is the open on this candle down here at the bottom and not up here at the top. So I thought I was trading the opening drive up here, and I'm not. I should have been taking the trade down here. And then even, or actually, let me go back. I think even if I took the next retest of this, I think I would have been golden as well. So right here is my entry, right? I don't know how high they've come, but I think I would still be in the trade right now, but I'm chilling, right? Let me just turn off replay. Yeah, so this was our first entry. This is the retest of the retest of the retest, and we're still golden on this trade, right? Especially if we're targeting here or here. I mean, it doesn't really matter. But risking 11 points to make 35. So, I guess the message is just, like, I talk about this, like, when we're trading like a retest, right? So if I was taking this here, let's just say I wanted to get in, let's just pretend these are equal to this. I know our wick is slightly below here, but instead of me going and finding another example, we'll just use this. But let's just say this happened, and I'm like, oh, if we retest this level, I'm going to get in long, right? And then price takes off and does whatever it's doing. And then when we start doing this, I go, oh, we're getting close to this level, right? So now I have like a good, 5-10 minutes to plan a trade, which should be more than enough, okay? So, Alan, I'll look at yours in a second here. So basically, as soon as I'm at this point, I mean, again, you guys should be thinking this is a poor low, right? So pretty good chance we're going to break below that. Pretty good chance we're going to retest here. And so then we start planning out our trade, and we go, okay, nothing too crazy. I'm going to do the same, the same thing, look left and go, oh, we have, strong high here. So I want to get out, I want to get out above or before we get to that high. So this is where I want my take profit to be, right? So I bring this down to here. And then for my stop loss, same thing. I look left. We got, basically our SR flip here, support, broken through, resistance. I don't know that it gets tested more. Well, we gapped through it, and we talked about that, right? That any level that we gap through, we just always automatically kind of identify as a strong level. And so if I put my stop loss here, I'm getting 2 to 1. I'll take this trade all day, every day. I'm risking 18. Wait, that's not right. Risking 9, sorry, to make 18, right? I'll do that all day long, every day. And so, again, the message, I guess, of the day is, don't try to take every single setup you see. If you don't have time to plan out your trade properly, and you've got other stuff going on and like you're rushing out the door like I was or whatever, don't try to force it. Make sure you're looking at the big picture, planning out your trades, and make sure that you're. I mean, obviously, like as we're the newer we are, the more we're gonna miss. But the goal is by the end of like the first 6 weeks to 2 months is that we start recognizing more and more. And then by the end of the 6-month period, we shouldn't be missing too much. We're all human. We're all going to make mistakes. I just, showed an example of myself making a mistake today. I've been making way too many mistakes recently. Like frustrating mistakes. I talked about this on my live like 2 days ago or whatever. So my mentor Shorty, he was live and he's talking about this trade on ES. So he was saying entry at 52.08 and 75 cents, stop loss 52.16.25, take profit 195.50, I believe. And it's and the risk to reward sucks. I didn't even pay attention. I just took his word for it. So anyway, when he called this out, I didn't have my trading software open. And just to give you guys kind of an example, I'll click it open right now. Like 1, 2, 3, now, boom. And I'll tell you when it's loaded. So as he was calling this out, he was saying when price crosses below 52.08 and 75 cents to take this short. And so I started rushing to open my software because it wasn't at that level yet, but we were approaching it very quickly, right? And this would just be another perfect example of me rushing to get into a trade that I really don't have to take. Like, it's not that important, right? My thought process was, God, it seemed like it seemed so much better in the moment, but that just also shows, oh, okay. So my trading software just opened completely. So just we'll say it was like a 45-second thing. But when you're trying to, quickly get into a trade, 45 seconds is a long time. If you guys understand how quickly ES and NQ can move during the New York session, 45 seconds is a long time. So anyway, he calls this out. I should mention also that I'm dyslexic. So in my head, I'm looking at 0875 for my entry. I don't know that I have the other example here. It's kind of weird. That's not what I was trying to show. Hang on, let me grab it for you guys really quick so what I'm trying to explain makes sense. And when I say I'm dyslexic, I'm not one of those people that's full of crap and says they're dyslexic when they're really not. I actually am, like, super dyslexic. All right, so again, keeping in mind I'm dyslexic and that I'm rushing, I'm looking basically at 8 and 75 cents, right? In my rush, I got in, where is it? Down here. It says average entry. This will make sense in a second. I got in my first contract at 8.75. but I actually wanted two MES and not just one. And by the time that I got in, price had already started going down, so I immediately clicked sell again, and that messed up my average. Instead of being at 875, I got in, like, my average ended up being 738, right? Hopefully you guys have already seen the mistake that I made. And then I go to adjust my stop loss, and I'm like, I should only be risking like 60 to maybe $80 just off the top of my head based on the trade that I'm taking. And it's showing me that my risk is $600. And I'm like, what the fuck? Like, how am I risking $600 to make, I don't even remember what it was to make. Normally, like, I don't, on a normal account, I don't have an issue risking $600. But this account I kind of opened when we started doing this mentor session, and I've been only trading like MES to basically kind of just show you guys you can grow an account, taking regular trades, not doing anything crazy, with small contracts, and just being consistent and trading your plan every day. But so on an account so small, I don't want to be risking $600 for one trade. That's insane, right? And so I was so confused. I'm like, why is it $600? Like, whatever, what's going on? I'm so confused. And then I was like, holy shit. This isn't 5,000, whatever it was. I don't remember. Here, let me pull it back up. It wasn't 5,208.75. My entry was 18,875. And I'm like, holy shit, I took two full contracts of NQ on a tiny account when I was planning on taking two MES. And so basically, I immediately tried to close the trade, and I ended up getting out like with I was red, where I was down like $400 at one point, maybe more. And I ended up just closing as soon as I saw any amount of profit, to get out of that accidental NQ trade that I took. So again, this is like 2 days in a row where I'm rushing to try to get into a trade, and I make stupid rookie mistakes. Again, like the message is really just like, slow down, take your time, plan out your trade, and like, don't, if you're feeling rushed or pressured or stressed, like, it might be worth just skipping the trade, right? Again, if we had actually traded the open drive like we had planned, this would have been a great trade. I know this wasn't the trade that we were planning. It was actually like higher. I think, I don't even remember. Our take profit was like up here somewhere. Because it was like 3-1. But and it would have been from here, and we would have got out, and we were solid, right? So something like this. There. So hopefully everything is clicking for everybody. Alan, I'll explain it in just a second. And I hope you guys are starting to take these trades and like plan them out. And again, like, Romy, I don't know where you're at, but we need to get you trading. Let's look at Alan's. Oh, are you you're literally talking about the opening drive that I'm talking about, Alan. Okay. This. Okay, so yeah, you're literally looking at exactly the same trade, and I didn't take it, and it looks like you didn't take it as well. The only issue I have with what you're showing is I don't know why you would target the strong high, right? So, and I mean, I guess that's like, this is great because we should talk about this, right? If you're taking this trade and we're going just off of this information here on the screen, we would not want to target the equal high. I mean, the strong high. Because most likely, I mean, even though in this case they ended up breaking above it, more likely than not, what they would do is come up to their reject, and then start making a downtrend, right? In this case, though, they ended up making a higher high and then started a downtrend. But so, yeah, this would be my only critique on what you showed is I would probably be closing at these either here at the body of this white candle or the body of the blue candle would be my price target. And let me just make sure. Yeah, it's 28 points. It's more than enough. Okay. So, Alan, I mean, it's actually, I'm glad that you shared that because you want to recognize, if this was a weak high, then we could target exiting there. But being that it's a strong high, we got to be aware of that when we look at that trade. Yeah. Your thought process is similar to mine. So, like, when I took my trade here, thinking this was the open drive, I was thinking, hey, like we had a strong high here, we broke above it. Things are seeming really bullish with the news. We're probably going to do something like this. And then I was targeting, like I said, 460. So getting out just shy of the POC. So I was kind of expecting this to happen. I'm surprised and also not surprised that they did this. But yeah, I wouldn't target the equal of the strong high. Is this clicking for everybody? Is it making sense? Are things starting to come together? A game, I don't care what the minimum points are. All that matters is you're getting at least two reward for every dollar you risk. Okay? So, Ghost, I appreciate like the what's the word? Like your politeness and all of that, but saying sorry is not necessary. The sessions are recorded for a specific reason, and we're doing them very late at night, and I'm recording them because, I mean, for one, I want you guys to be able to go back and rewatch anything that you want to rewatch, but also I don't expect everybody to be able to attend, at the same time on a given day. But again, like I appreciate you being polite, but really not necessary in that sense. Anyway, hopefully everything's clicking. I'm basically done unless you guys have questions. We'll talk about the Virgin POCs really quick. It can be a little bit confusing. So, okay. I'll explain it really quick. So, let me just look for a good example for you, because that would be the best way to explain it. Okay, we're going to use this example. If I do this and hit replay, and I draw, I'm not going to draw value area high, value area low, but we'll just draw my POC here, right? And it's actually a really good question. So basically, I mean, the best way I can explain this, and I'm not trying to sexualize it, but if we're talking about a virgin, obviously somebody that's never had intercourse, right? Or never been touched, I guess. And obviously, the point of control is going to be the area where the largest amount of volume was traded on any given day, right? So when we're looking at our POC, while it's being developed, it has to be touched, right? So on this day, like we went through it, came back to it, bounced, back through it, right? Back above it, rejected, back above it, came back to it, blah, 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 blah. So in this trading day, it was touched a bunch of times, right? And if we're talking about something like SPY, it can be touched while it's being formed. So like during the day, and it can be touched pre-market and post-market. So basically, like, let's say this is Wednesday, and today right now is Wednesday. Market closes, and post-market, it still keeps getting touched. That's fine. And then Thursday morning, pre-market, it's getting touched. That's fine. Once the New York session opens again, as long as this hasn't been touched, it remains a virgin POC. So again, the day that it's being formed, and then also post-market and pre-market after that, it can be touched as many times as it wants, and it still remains a virgin. What we're looking for at that point is you can see like the next day when we opened below it. We never came back and retested it. We ended up actually going way lower and then finally coming back up. And it right here at this moment, so if I do this, is where this went from being a virgin POC to a regular POC. Okay. And then the distinction between a virgin POC and a regular POC is virgin POCs acts as magnets for price. So like a good example of how like my mentor taught me is like right here, I have a virgin POC. I'm not going to go and look for more, or actually there's one right here, but I'm not going to go and look for more, but there's two. And let's just say we have like whatever, 4 to the downside and 1 above. More likely than not, price is going to get pulled down to the 4 to the downside and not to the 1 above. So that's just kind of like a general rule of thumb. They act as magnets for price. And they would be considered like 10 times stronger than a regular POC. Where regular POCs act as magnets for price, but not... why are my levels off? I'm like tripping here. Whatever. I'm not even trading tomorrow. I don't know why I'm worried about it. Did I chart this on regular trading hours? It's weird. Or this is developing, right? No. Okay. I'm really like losing my mind here. So yeah, that's the distinction. Does that make sense? Because it's always like a little bit awkward to explain that it can be touched during the day that it's being developed, and then post-market and pre-market. Okay, great. I'm glad. Hopefully everybody else understands it. If you don't, we can talk about it again. A game, I would say, like on ES, like to kind of like answer your question better, I would be looking for like a minimum of 5 points probably. And I would consider that a scalp. But as long as I see a setup where I can... I don't even see the amount. I don't know why. 513 to, I guess I need to make this way bigger. Oh, there it is, 10. So like if I see a setup where I can do this, risk 250 to make 5, like I'm still getting $2 for every dollar risked. I'll take this. But if you're following like the advice of what we're talking about here, you're looking for one trade a day for 6 months. I wouldn't recommend taking something this small on your one trade a day. But after you finish the one trade a day for 6 months, if you want to take a scalp because you see a setup where you are pretty confident you can make 5 points only risking 2.5, then take it. Because sometimes you will see a setup like this where you can't get more than that, but you're like, why wouldn't I take this if it looks, like pretty strong and like it'll work versus like just not taking the trade at all because you don't feel like it's a bunch of points. You know what I'm saying? So, yeah, during the 6 month phase of one trade a day, I would look for more. But after you finish that, as long as you're getting at least a minimum of one risk, two reward, I would take the trades. Okay. Anybody have any questions? If not, I'm going to be wrapping up here. I feel like this was a way more concise, cleaner explanation of TPO than last time. And I apologize, everybody. I was planning on redoing it over the weekend, and I've been busy with a lot of stuff, and I didn't have a chance. And so I figured I would just do it live with you guys tonight. But also, with that said, I don't have a ton more stuff to teach. So, like, things like this, like Alan sharing, like a trade, and we can dissect it like, oh, great entry, but your take profit should be here, whatever, where we can actually like dissect trades and go over things and start recognizing things that were done correctly on trades or mistakes that were made that need to be fixed, so on and so forth. And you'll see, like, even though this would have worked out, I would still call it a mistake. You should be closing before the strong high. And so, like, we'll talk about stuff like that where it doesn't matter what the result was. What matters is, did we recognize everything before we took the trade? Did we find like a good level for profit? Did we find a good level to put our stop loss? Things of that nature. So again, the result I could give two shits about. What I care about is the setup. So if you share a setup that didn't work, but everything else was perfect, I would be like, hey, this was a great trade. It just, probabilities didn't play out in our favor. So here's another one from Alan. Let me just read it really quick. Yeah, I don't understand this trade. I don't even know where to go. You think it was a single print? Okay, so you were targeting what you thought was a single print, which is fine ish. I mean, I think your target's fine. Previous day value really low would have been fine. I just don't understand the entry. Like, I don't. Um, oh, maybe it could have been an SR flip, but I think you're even a little bit high. It's kind of a bummer. You were close. Like, you barely got stopped out. Um, what time is this? I don't know your time zone, but this is April 23rd. And it was 5 minutes, right? Oh, shoot. That's not what I wanted. So I'm guessing you're here? Yeah. It's this? Five minutes. I'm like completely tripping out on this because it says April 23rd. It's still the 22nd here. Oh, published on April 23rd. This is the 22nd. And we're looking at 5295. Okay. So we're. Oh, here. Somewhere? 5295. Right here. This. I don't think this is it though. Unless you have like very different VWAPs than me. Here? Is this it? No. You are on ES, right? Yeah, ES. Oh, you're on ESM. Okay. So, let me find it. and it was at 295 ish. Yeah, 52.95. Here. Is this it? I think this is it. Oh, wait, no, you said today. This is Sunday. Oh, let me just leave the line at 52.95. There. Here? No? Oh, I have replay turned on. That's why I'm like, what in the... This. Jesus. Okay. Um... So you have like a 4-point stop loss. You were targeting 275 and your stop loss was at 299. So 299. For one, I think your stop loss is too tight. So, like, without even talking about the entry, you want your stop loss above this, right? As a minimum. So, like, even the body of this candle, you still might have got stopped out. I'm okay with still might have got stopped out. Yeah. It's kind of hard to say. Like, I would want my stop loss somewhere literally, like, right in this range here. And I don't want to say I wouldn't have got stopped out, like, over, a dog's, like the hair on a dog's ass. If I took the same trade, there's a chance I got stopped out. I'm trying to, like, just really see here. 20 points, risking, yeah. I think just based on the 20 points, my stop loss, I'd probably wanted it, like, at least 5. But again, that's just based on how I trade. But, like, if we're looking at this, if your stop loss is here, and you got stopped out, I would understand. Like, we're saying we want our stop loss above, like, these wicks here, right? And I think your stop loss was, like, right at that almost. I mean, a tiny bit above. And you want to give it, like, more room. Because if they're going to stop you out, they're coming here, which is pretty much exactly what they did, right? So if they're trying to stop you out, you would expect something like this, which is exactly what happened. And I'm not trying to draw the exact scenario, but I kind of show this over and over and over again. And when I show it over and over and over again, like, if you had just sent me a screenshot of this, I would still be saying like, yeah, you probably want your stop loss a little bit higher, a tiny bit more breathing room. Like if I'm eyeballing it, just like 2 points above that is not probably not even enough, right? So if they're trying to stop me out, and we're talking about ES that can move pretty quickly, I would want to have more than a 2 point buffer between where I think they might come and where my stop loss is. So, like, just eyeballing this and not trying to be like, oh, you're wrong. Because even if your stop loss was, like here somewhere, I would understand. Like you're still giving yourself like a little gap between there and there. But for me, again, I would expect them to come to here. I would want to be a little bit above. Um, 3 points, 3.5 points, something like this, to where I feel like I've got a little buffer. I'm still getting over 3 to 1 on my risk to reward. So hopefully this makes sense. But then I'm also very confused on your entry. So I could see this. Support. There's an issue I have with this. Yeah, so here it became support. Was kind of resistance. I mean, you're right there. So, good enough. I think. What is this? 98.25. I think that might be better. I don't know. It looks like I'm wrong. I'm just like guesstimating, I guess. Yeah, I probably like this better as an entry. Like resistance, broken through, support. Tried to act as support here, broke back through. If we come back over to here, resistance, broken through, tried to act as support, broken through, resistance. I think this was your entry on that trade that you're looking at. Your entry was basically your stop loss. Yeah, I don't do VWAP projections. All that I can say on that is, like I don't mind reviewing trades where you're taking entries off of things that I don't teach, but I don't teach VWAP projections and I don't trade VWAP projections. I mean, they do work, but not really. It's just not how I trade. So, based on what we just looked at, I like the 298 as an entry, and I think hopefully everybody like watching understands the thought process when I was looking at that. It's literally just an SR flip. If we had to be taking a trade here, I would prefer this over the entry that Alan took. And then, for my stop loss, my eyes immediately come to here. But then they also go to this candle here where I'm like, I'd really rather have my stop loss above there if I can. And still be getting, at least 2 to 1. Yeah, something like this, I'm good. I would take this trade. Kind of just based on what I covered. But yeah, I don't take SR flips. I mean, I don't take VWAP projections, but I'm not trying to change who you guys are as traders. Like if you if you trade VWAP projections and you have, a 60-70% win rate trading VWAP projections, like, who am I to say don't do it? Keep trading those trades. If you have a high success rate trading it, keep taking those trades. But it'll just be hard for me to analyze it for you, because it's not something that I trade based off of. Okay. But based on what I trade off of, like, this 298 level looks a lot better. And then, like, you have your Psych 300 level just a little bit above that, which is actually where this would be the cleaner trade, right? If we went short here, at the Psych level, and then me knowing, like, I'm getting into a trade basically right below a Psych level, that just gives me more confidence, that it is probably an area that they reject from, if I have, like, a decent SR flip there or whatever. Hopefully this makes sense to everybody. Hopefully everybody's on board. If you guys can, for next time, and again, not from a place of embarrassment or, like, trying to make people look stupid, because that's never the goal. If you guys have trades that you can share, whether you took them or not is kind of irrelevant, but just something that we can review and kind of dissect, and that way see, like, what we see, like, was it a good entry? Was something missed? And that way, as we review it more and more together as a group, hopefully when you're trading live, you start to recognize all of the little things that we're talking about. Oh, and Romy already took off. So, yeah, hopefully that clicks for everybody. Wow, I went a lot later than I was planning on going. It's already midnight. I am going to call it here. The only time you use regular trading hours is when you're charting your TPO for futures. Other than that, you're going to be on extended trading hours all the time. Okay? I'll hang out for just another second, just in case you guys have any more questions. I'm staying live. That way it's recorded if there are questions. But I'm done. Are things starting to click for people? Are you guys seeing more success with your trading? I hope so. I really, really do. I also do want to say really quickly, like, while I'm just kind of hanging out here, I really, like, with every ounce of my being, I want to see all of you be successful in this. Like, I really, truly do. Like, this isn't some bullshit where, I'm trying to use you guys as a paycheck or something like that. I really, truly want to see every single one of you be successful. And so I really hope things are starting to click. Again, I can't control anybody or force anybody's hands, but I know that the stuff I'm teaching works. And so if you just follow the advice, because I've done this with enough people, and the people that actually listen. So, like, I've mentored people that refuse to do one trade a day. Like, they'll do it for a few days and then they'll get frustrated and they'll take more than one trade in a day and then they'll blow their account. And then they'll start over again. Same thing. They'll do one trade a day for a week. Then they get frustrated and they blow their account. And I can't help those people. But every single person that I've mentored that does, one trade a day for 6 months, that journals every trade, that plans out their trades before they take them, do a minimum of one risk to reward, and don't move their stop loss or take profit. And again, that's just for the 6-month period. Once you pass the 6-month period, at that point, you've learned discipline and you've learned patience. And if you see like key levels where you want to trail your stop loss, just to make sure that you're locking in profits and you're not taking a losing trade, that's fine. But for that 6 months, you want to let your trades play out. And that way you learn, that more often, or that you're going to be more successful in trading if you let either your take profit get hit or your stop loss get hit. And I would still recommend doing that once you've finished the 6 months. But after 6 months, like at that point, you should be a good enough trader that you can start doing really kind of whatever you want. But I would really kind of try to stay in the realm of what I'm teaching. And I guess the point I was getting at is the people that have followed those rules for 6 months and done it, every single one of them has been successful. Every single one. There isn't a single person that hasn't succeeded that has followed those rules. And so if you just embrace it, 6 months is not a long time. And you learn the patience, you learn the discipline. From there forward, like trading is like your oyster or whatever. Like things get a lot easier, right? Yeah, little G, all of this is going to be within the books that I tell you guys to read. I'm just kind of teaching you guys like the key bullet points, but those books, like read them, reread them, grow, learn, get better. Yeah. Let me see. A game, I think it's also really important to chart when the market's closed. Because once the candlesticks start moving, it really messes with our psychology. So. Oh, and A game, I might not have fully answered your question. Regular trading hours would be for anything not futures, or anything that's not open 24 hours a day. So like if you trade cryptocurrency, you would leave extended trading hours on. If you're trading SPY, whatever, NVIDIA, Apple, all of those things you would chart on regular trading hours. Anything that's futures, you would chart on extended trading hours, except for TPO. TPO is always going to be charted on regular trading hours. Okay? Oh, that's awesome, little G. That's awesome. That's killer. Yeah, Apex has 90% off right now. I have a code for them if you want my code. This code will get you 90% off. The key is you have to know how you trade, because like with Apex, you have to choose either rhythmic or sorry, I forget what they call them. You have to choose either rhythmic or Tradeovate. So that's my code for Apex. That'll get you 90% off, and I'll get a little kickback. But rhythmic would be for people that are trading on a computer, and you would link it with a broker, so like Quantower, which is great. If you're trading on like a laptop, if you're trading on a Mac or like a tablet or a phone, you would want to go through Tradeovate. Okay. So rhythmic is only for people that are trading on like a Windows-based computer. Anything else you would use Tradeovate. So if you're signing up with Apex, they have their like right on the homepage. This is rhythmic, 25, 50, 100. This is Tradeovate. Rhythmic would only be for people trading on a Windows-based computer. Tradeovate would be for people on cell phones, tablets, or Macs. Right now, with that 90% off, you can get a 50K account for, I think, $15. So it's a pretty killer deal. Um, so yeah. Um, all right. It looks like I've answered everybody's questions. Um, I will just say, and I'm not going to say this often, but it can be kind of hard to keep up with the chat and also be teaching at the same time. So if you guys ever ask a question and I don't answer you, I'm not ignoring you. It's not intentional. Don't take it personally. If I overlook your question, just ask again. Ask in the general chat, DM me, whatever, whatever it is. Um, but yeah, don't take it personal. Like, I'm never purposely ignoring anybody. So yeah, just in case I miss a question, not personal, either just ask again or DM me or whatever, and we'll cover it. I'll either wait to cover it, like live so that it benefits everybody. Or if it's something that's, minor, I'll just answer you, immediately through DMs or whatever else it is. But I just want to make sure everybody knows, like, I don't, I would never intentionally ignore anybody's question. I will say if I don't know the answer, I'll tell you I don't know. Because I'm not one of those people. I'm sure you guys have probably encountered people in your life where they just will completely bullshit you. Like, they would rather pretend that they know the answer to something and just spew out a bunch of bullshit than actually just be like, oh, sorry, I don't know. Because they think not knowing makes them stupid. But realistically, nobody knows everything. I don't know everything about trading. I know quite a bit. I still try to grow and learn every single day myself. And if I don't know the answer to a question, I'm going to tell you I don't know. Maybe I'll try to look it up. Maybe I'll ask my mentor and I'll get back to you. But I'll never BS you guys and just like, make up stuff to try to save face or something like that. But regardless, I would never ignore you. So like if I don't know the answer, I'll just be, oh, sorry, I don't know. I'll try to find out, or whatever it is. I'll try to look it up. I'll try to learn it. But yeah, I definitely don't have the answers to everything. But again, the main point that I'm trying to make is I'm never trying to ignore anybody. So always just re-ask a question if I overlook you, okay? Like always, everybody, much love, much respect. This is all VWAP, yeah. And so I don't give VWAP too much weight. As you can see, like, it's not bad to trade off of. You can definitely take trades off of it. I use it more as of an area where I might close a trade, and not really where I would take trades. But that's just me personally. And then this is just a VWAP band. So like you see the band multiplier is 0.13. And then my second is negative 0.13. You guys wouldn't have that option because this is a custom VWAP. But if you go to the regular VWAP, so like you just go to indicators, type in VWAP, you would find this one, volume weighted average price, add that to your chart. And then under the settings, you just change the band multiplier to 0.13 and click OK. And now you'll see it's overlapping mine. So like if I turn this one off, they match perfectly, right? So the only difference is mine's private, and the other one's not. But there's no other difference. Like, I just like the coloring of this one, but the other one works fine. And you could also change the coloring, but this one's already how I like it, so I just use this one. All right. With that said, I will see you guys tomorrow, same time, same bat channel, same everything. Probably not going to have a ton to talk about, but we'll talk about as much as we can. Hopefully go over some trades. I'm not going to be trading tomorrow, so I won't have anything of my own to review, but we can always just kind of look at the chart and see what setups we see if nobody has any trades to share. But I'll post the link right now and set up the stage for tomorrow. Right now, that way it's there for you guys. All right. With that said, much love, much respect. We'll see you all tomorrow. Peace out, everybody. Bye.